Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for an ABC to the upside or a wave 1, 2, 3, 4, 5. Most common target area for a wave C is between the 1 and the 1.236 trend-based fib extension taken from the low to the high to the low over here, giving you a target between 47.6k and 48.9k, with the 1.618 also still being a target for a wave C. It's just a little bit less common. For a wave 3, the 1.618 is usually a minimum target sitting at 51k. That would then mean we also take the high over here at 49k. Now if we then zoom into this impulsive structure here to the upside, we are looking for a 5-wave move to the upside here, either in a wave C or a wave 3. Here we are now looking for a wave 1, 2, 3, 4 and eventually another high in a wave 5. Common target area for your wave 4 is between the 0.236 and the 0.5, taken from the low to the high of this wave 3, giving you a target area between 46.9k and 45.5k, and a 236 over here is touched, as you can see. The invalidation for a wave 4 is the 0.618 at 44.8k. If price would move to the downside and hit the 0.618, probabilities will be higher to continue towards the downside at a later stage. Now, as shown in this scenario, I have an ABC as well as an impulse 1, 2, 3, 4, 5 to the upside. If we are looking for an ABC, the higher degree scenario is a flat structure here. In this case, we are looking for a 3-wave move down in a wave A, ABC zigzag to the upside in a wave B, and then an impulsive structure to the downside in a wave C. Most common target area for B is between 51.6k and 53.1k, between the 1.236 and the 1.38, taken from the high to the low of A. Less common target is the 105 at 49.6k, also less common the 1.618 at 55.6k, and a minimum target for a flat is the 0.9 at 48k. The more bullish scenario, where this move to the upside is an impulse in a wave 1, 2, eventually another 3, 4, 5, gives you the target area here for a wave 5 between the 1.236 and the 1.618, taken from the high to the low of this wave 4. This gives you a target area between 51.6k and 55.6k. What we are looking for in this scenario is still a bigger range to form, similar to the length in time as this range over here. So we have to remain very patient. Currently we are in a local uptrend, and only when we get a range the size of this range over here can we start thinking about a wave 4 that is of the same degree as the wave 2 that we have over here. Any shorter range after which price continues to the upside are then part of smaller 1-2s that we have at the beginning, for then eventually 4-5, 4-5, 4-5s to end a bigger wave 3, and then you get the bigger wave 4 similar to this wave 2 over here. For both the flat scenario in a wave A, B, C, as well as an impulsive move to the upside in a 1, 2, 3, 4, 5, we are looking for price to move towards the upside. So in this case, if price then moves towards the upside, we are in the position to observe what price does to then give us the probabilities for a wave B and a move down in a wave C, or continuation in an impulsive structure where eventually we're looking for a wave 5 to finish and continuation to the downside. One thing that I will be looking for, however, is for price to fill this monthly gap. On the monthly time frame, we have a very big gap, and this was the second touch of this gap, and now we hit the gap for the third time, increasing the probabilities to fill the gap towards the upside. 53.3k therefore is an important target, and if we look at the flat scenario, the 1.38 is right around that area, so that is quite nice. And in the bullish scenario, it is also in the middle of a potential wave 5 target area. So the high at 53.3k over here, the high of the gap, is an important level. If we look at the bearish scenario, then we are looking at an ABC, after which we expect continuation to the downside. In this scenario, wave B is a triangle, and therefore the most common target area for a wave C is lower. Instead of the usual 1 to the 1.236 trend-based fib extension taken from the low to the high of A to the end of B, we are now looking for the 1-to-1 to the 0.618 here, 45.1 to 48.1k, and we already hit the 1-to-1 as you can see. Now, if this is the high and the end of your wave C, you now want to see impulsive structures to the downside. If we are looking for impulsive structures, there's only 3 structures that you can look for. an impulse, a diagonal, or a double 1-2. If we go to the 15-minute time frame and observe these three scenarios, we start with an impulse where we want to see a clear 5-wave structure in a wave 1, 3-wave corrective structure in 2, and then a wave 3, 4, and a wave 5. If you look at this structure to the downside here, then you can see a lot of overlap. And in a wave 1, 2, 3, 4, 5 impulsive structure, you don't want to have overlap between a high of a 4 and the low of a wave 1, which arguably is the case over here. Counting this as a separate wave 1 structure and all of this being a wave 2 also has a low probability, so therefore the impulse has a low probability at the moment. If we are looking for a diagonal structure to the downside in a wave 1, 2, 3, 4, 5, then what you can see is that the trend lines are expanding. The most common diagonal structure is a contracting diagonal where the two trend lines are converging to one another. However, an expanding structure over here is less common, and what you want to see in an expanding structure is that wave 3 is longer than wave 1 and wave 5 is longer than wave 3. However, in this scenario, that is not the case. You can see two 1-to-1 fib times on the chart over here. This one is taken from the high to the low of a potential wave 1 to the high of wave 2 and then a diagonal 1, 2, 3, 4, 5. You can see wave 3 is much shorter than wave 1, didn't even get close to the 1-to-1 over here, and the same is true for this wave 5 here compared to your wave 3. So the trend lines are expanding, but wave 3 is shorter than 1, 5 is shorter than 3, which therefore has a low probability. And if we then look at a double 1-2, then we need to look for a wave 1, 2, 1, 2, and a continuation to the downside. The real invalidation would be price taking this high here at 47.5k. If we look at a double 1-2, then what you want to see is this to be a wave 1, this a 3-wave corrective structure in 2, and then another 1-2. This is the only potential scenario that remains at the moment. Still not great probabilities because of the first structure we have here towards the downside, but it is the one that is remaining and we have to keep an eye on. Now, of course, in a double 1-2, however, I do like to see bearish CVD divergences, especially between the different wave structures, but at the moment, that is not the case. We have a lower high on price over here, but not a higher high on the CVD, and also here no higher high on the CVD, which doesn't really help the probabilities for a double 1-2 to the downside, as a double 1-2 should be very, very bearish. So if we then look at the probabilities of the different scenarios, then on the low time frame, the 4-hour chart, probabilities are higher for price to take this high sooner or later. Price here has hit the 886 Fibonacci taken from the high to the low, which therefore means that any move towards the downside has a higher probability of being a C or Y, which increases probabilities to come back up at a later stage to take this high anyway. However, if we look at the microstructures here locally, at the moment the probabilities are higher. This move sideways is a corrective structure and therefore it increases the probabilities for wave 4 price action. Of course, price can move towards the downside, move deeper into this wave 4 target area, maybe even hit the golden pocket over here. It doesn't change the probabilities that at the moment this structure here looks more corrective than impulsive to the downside, increasing the probabilities to take this high at a later stage. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.